Okay, there we go. About to say. What's going on, guys? What's going on? That's very odd. Wow. Okay. What's going on, everyone? About to get started here just shortly. That didn't do it. Okay. Hmm. Very odd. Just a minute. So, what's going on, guys? It's Monday. It's a new start to the week, new grind. A lot of earnings this week. It's going to be a pretty loaded week. I know that Avery also mentioned here just before the market closed, we also do have Fed speaker pretty much talking as well. Let me actually just take a look, see if I can find out who exactly it was. Let me take a peep at the economic calendar real quick. And it's James Bullard. Oh, just even great on foreign relations. So we'll see if he does anything to the market. I mean, obviously, I see Apple's right now is pretty much up right now after hours, so I would assume something's going on. Maybe there's something that he's talking that maybe the market likes for right now, the moment being. Um, but pretty much just getting into what I saw with Spy here today. We had some very weird type of price action, and pretty much a very little bit more of a difficult day to really. We started off with a little bit of a seesaw action, if you saw that, right? We tried to make a strong push. Nasdaq was up 100 points earlier on. We pretty much gave it all back. Went down about 70 something points on Nasdaq. Then we pretty much tried to make a rip back up. We went back red, chopped up a little bit, and then we made a new low of the day in which you saw that face rip. So quite the drastic range that we traded in today. I think that's probably the most notable thing is the range in which we traded today was just extraordinary. And especially looking at a name like Nvidia in which that ticker was pretty much it went from slightly green down to red to doing a face rip up about $6-7 at one point, then going back red. I mean, just insanely crazy price action off of just that one ticker itself. I know that we had a cloud alerts that went off, and it does seem like the cloud alerts pretty much triggered off because of the fact that of the volume that was pretty much trading and the range beside that. So 5 times about normal average volume, and then also just the range in which it traded in, which was pretty much extraordinary. So that was pretty much the other highlight. But what I was looking at earlier on in the day was just pretty much this descending channel action that we had going on with SPY. I was pretty much looking to press into this low that we had earlier on around lunchtime, in which we literally just our low of the day at that time was about 435.61. I was looking to see if we would press into 434 half. That was not the case. As you saw, we stopped shy. We had that beautiful face rip in which it looked like we were gonna break out of this downtrend. You had that clean break. It's just that we were not able to get a follow through. That was pretty much your biggest concern. So you had a little bit of a double top formation there intraday, and you saw you drag yourself right back into this descending channel as we popped out of it really late into the hours of the market close there in the last few minutes there. So that's something I'm gonna see. Do we end up holding above this high that we had today? As you see, after hours, we're pushing near that 439 mark. SPY's about $1 up right now, and likely because of something that Bullard said here after hours. So we're gonna see if we can maintain this high of the day that we had here off of this. If we can maintain this 439, then I am looking at making a move towards this 441 mark. That's what I had already drawn up. And then I still have that anchor VWAP, which is pretty much backdated from our high of the year so far, from early January. That's our anchored VWAP that we have at that 442 half. And I believe that would likely be our top case scenario in which will likely open up towards that 442 half is what I would anticipate if this holds after hours from what Bullard is saying. I likely see us pretty much open up right around that anchored VWAP, reject it, and that'll likely be our downfall in which we'll see more selling pressure. Obviously, tech itself, NASDAQ, is pretty much under heavy pressure following since last week of that matter. So we'll likely see that selling pressure continue. A few names that pretty much stand out. Obviously, the semis will be on watch. Tesla has their earnings coming up, if I'm not mistaken, tomorrow, I believe. And on top of that, we also do have Netflix earnings. So those are pretty much the two on spotlight right now. We'll see what those two earnings, how they hold up going into their earnings, and that'll be pretty much the bright spot right now as we kick off the week. But 442 half, I'll like to see if this holds at that anchor view up, but I would expect that to be our downfall, and then we'll likely revisit these lows that we pretty much put in from today. All right. So that's pretty much what I'm expecting from SPY. Not too much that's on the watch list right now in particular, unless any of you have something that you're watching specifically. But it seems like we're pretty much going outside the box. I know that one that I was watching earlier on was Caterpillar. This is one that I was watching earlier on in the day. Obviously, you can see the nice little breakout that we had off of this daily chart. It was just a beautiful, clean breakout. I was watching that one earlier on. I was expecting to pretty much push towards 236. We got as high as about that 234 half near. And one of the patterns that pretty much stood out to me intraday was once we started to perform this little flag intraday. If you want to say a little descending triangle action, we got a nice little breakdown off of it, but then we had the nice little face rip. So I was looking to see if we would base right around here, right around this 230, 230 half. We ended up finding a little bit lower than what I expected, and we had a nice rebound, which then caused that downfall into the end of the day as the market rolled over. So that was one that was on the watch list. I'm going to continue to watch it. I'll see if it reclaims that 232 half, and I still have my eyes set on 236 as the overall PT. All right, so that's one I'll keep an eye on. Um, let's take a peep. Wiley, what's going on? Richard, let me take a peep at Netflix for you. And this is quite an inverted head and shoulders setting up right into earnings. Nice catch on the 5 minute here. I don't know if anyone saw that into the end of the day, but that's a nice little inverted head and shoulders action. I do want to take a look at more so at the daily. I think that'll probably give you a better picture. Let's see. I just want to see the monthly. How does it actually look off our trendline support, which I do believe we've actually broken. Yeah, we've broken our trendline support. That's been cracked. So that's definitely not a good sign, but we did break the trendline support off of the monthly. So that's definitely not a good sign. Now, if I were to say that, and obviously being the fact that we dumped so hard after the last earnings, I would expect that we get some kind of rebound off of this earnings. Not to say that we're going to get a strong rally. That is going to be something which is going to be compelling for me to go long term on Netflix either. But if we're going to end up retesting this trendline support off of the monthly here, it's a high case that we can trade up towards this 360, 365 here. It's what I would anticipate and retest this trendline support off of the monthly that we broke down as. We'll retest it as resistance, and that'll be where we end up rejecting. So right around that 365, if I had to take my bet off of this earnings, that's ideally what I would say is that you're looking at is likely towards that 365 in which you retest your trend line support from the monthly chart here, and that'll be your resistance, and that'll be our downtrend, basically your reversal spot to continue this downtrend. But 365 is what I would say off of the trend line support off of the monthly. Now going back into the 5 minute, I do like that little inverted head and shoulders action you have going on here. If I look at that inverted head and shoulders, it just looks beautiful. My only concern about this inverted head and shoulders is that you may not get too much of a follow through with the market in terms of the fact that it's likely that we're going to end up gapping up. That would be my primary concern right now. It would be that. But in terms of where I would say you have potential of making a move towards, in terms of my supply zone, I would be watching here is up towards about this 341 half, up towards 342 would be where I would see this getting a nice gap up. If we were to get a strong move, and this would be whether, I mean, market would obviously have to cooperate, right? But if I can see that, I can see where you had this prior distribution basically, and which pretty much led to this entire drop off right here. So if we were to see a beautiful continuation off of this, market would need to cooperate. Then I can see this stretch up towards 346 to 346 half basically, in which you see that little prior distribution that you had earlier on from that was from the 14th of April from last week, right, on Thursday, and you had this beautiful little consult distribution before you had that nice little sell off. So ideally, short term, maybe we get a nice gap up 341 ish. And if we get continuation, I'm looking at 346 would be where I would see for my continuation on this one. And maybe we get up towards that 365 off of the earnings. Who knows? All right. So that's pretty much the two PTs in which I would say conservative 341, 342. And if we get continuation and we can extend the rally, then I'm looking up to 346, 347 will be my upper range for you. All right. The other one was CLF. Let's take a peep at CLF. And this is pretty much right into where the market was feeding off with momentum is all the energy, your energy and pretty much your precious metals have really been where you wanted to stay as your quote unquote safe haven right now. But taking a peep at this, we opened just slightly flat to red here basically. Looking at it, I do see a nice little wedge action going on here. So if I were to pretty much plot out this wedge, you're basically looking at something a little bit along the lines of this. So a nice little wedge going on. So you're basically looking at trying to break out of this wedge. If you're able to break out of this wedge at this 32 flat, that will be where you would particularly want to go long, try to chase into a new all-time high, taking out that wick high of that 34, which will give you about a $2 move. Once it does end up breaking out from 32 to 34, that's a $2 upside basically once you end up breaking that downtrend resistance here off of this little flag formation. Otherwise, you risk coming down to support here, which is right around that 29.75 mark, and you which pretty much you risk basically doing the wick fill down to the downside here, which that definitely looks like a Dougie wick right now, and that'll pretty much be right in towards your gap fill here as well, right around that 27.50 mark, in towards that gap fill. If you haven't noticed, there's also a tiny little gap here as well. So that's something to pretty much note as well. The nice little gap fill here. That wick is definitely pretty gnarly that you had. So 29.75 would be where I would say is your support. Maybe that might be your ideal risk reward in terms of entry, right? That way you can capture a larger move to the upside. So 29.75. Otherwise, you wait for that $32 break and you take it right into that prior high here of that $34 mark. All right. And that's pretty much what I would say in the way you want to play that. Oxy, I know this one's just been continuing to just grind higher endlessly. You are still within this ascending triangle formation though, so there's not necessarily a clean breakout just yet. It tried to peek out of this ascending triangle, but you were not able to break out this all-time high here yet. So 63.24 is still that all-time high that needs to end up breaking for you to continue to push and continue to grind. Definitely great price action off of today's move. But if I were to say if you really truly want to get maybe in like an ultimate risk reward type of entry here, then maybe try to get in towards the bottom of the cloud here. Not necessarily the bottom, but try to get in towards the upper band of this cloud, that 9 EMA. That's pretty much sitting 8 EMA, I believe it is. You're pretty much sitting right around that 59.40 mark is where ideally, hopefully you get some kind of pullback. Maybe on the morning gap up of tech, maybe you get that kind of pullback here from the minerals. So I would look to see if you get an advantage on that, and that'll be maybe the ideal spot I would look to personally get in around that 59.40 mark. Otherwise, I would particularly wait to see if you take out this high of that 63.24. Otherwise, you're risking another wick above this trendline resistance, or I wouldn't say trendline, but you're risking the resistance of the ascending triangle and pretty much coming right back into the triangle. All right. So that's what I would basically say about that. But I love this chart. I would stay long on the minerals, stay long on pretty much your precious metals as well. And those are pretty much two sectors in general. If you're trying to hide from this market volatility, you're staying within the energy and you're staying with the precious metals, especially going out long term. I wouldn't necessarily suggest playing weeklies on them though. I would probably say at least give yourself some time. Give yourself about 2 3 weeks at the very minimum in that case because a lot of them do tend to move pretty slow, and I'm pretty sure that Sig usually gives out a lot of these. And if I'm not mistaken, he ends up giving them out with pretty far dated expirations. I don't think he usually goes very short dated, especially when it comes to the oil, energy names, and the precious metals. All right. So that's pretty much what I would say about that. But other than that, hopefully that kind of gave you an idea of what I would say and how I would gauge that. But I think that kind of wraps up our session today. I know that Sig and Dapper are pretty much getting ready here to start class. So let's switch over. Let's tune in, see what the guys have. I think they're talking about spreads here today. I'm not certain if it's credit spreads or debit spreads. Maybe a mixture of both. But let's tune in. And obviously, I think those actually is probably going to be one of the most valuable lessons. I'm probably going to tune into that because I personally just love to play spreads, and it's also just cheaper to pretty much play that instead of just naked calls or puts in which they end up costing you more premium. All right, so definitely a good lesson to tune in today. So let's head over to Sig and Dapper, and that'll be a wrap for me today. All right, guys. I'll see you guys on live tomorrow morning. But other than that, appreciate you guys joining in. All right.